Hey, what's going on, guys? This is Juan from Juan's Alert Group, and today I got a couple questions on when to enter and exit trades. So I thought that was an amazing question to ask because maybe I didn't go over it too much. But anyways, let's go over it right now. So we're gonna be looking at Mac. As you guys recall earlier, I did call a play on Mac around what does it say? 6:46 a.m. 6:46 a.m. So we did call a play on Mac. So we called a 17 put, 1750 put, expires on 4/17. So now let's go to Mac. Excuse me. So first we're gonna be looking at our autograph. All right. So before anything, we want to see how the market opens. We don't just want to hop in any plays. We want to see what the trend is going to be looking like today. So as you guys can see, we opened on red. So we did open on red. This is 637 right here. So first thing we want to do is when the market begins an uptrend, we want to establish our support right here. Here it began an uptrend. It began going up. So we want to establish our support right here. So boom. So market goes up, resistance. So now we know our support and our resistance. Now we have an idea of where the market is headed. Why? Because in the history of all of trading, markets always follow the pattern of support and resistance. Okay, so right here we establish our support, we establish our resistance when it begins the downtrend. So now we know the uptrend and the downtrend. So right here, if we began to trade here, it would be a bit risky. Let's say we entered around here. That's a bit risky because you really don't have a sense of the market, because here it could either go straight down or it could just bounce back up and go up here. So in essence, what we want to do is wait a little bit. Now watch the volume. Watch the volume. This is when you should be entering the put trade right here. Boom. So we called it around somewhere back here, right? This is where we call the put. So if you get a great premium at this entry here, if you get a better premium than the one stated, that is a great entry. Why? Because one, it's backed up by the group, right? And second, it's backed up by the trend. As soon as the volume starts picking up, this is going to become a downtrend. Why? Because a lot of people are selling right here. So boom, we see a lot of people selling. Volume is high. So now we see the downtrend here, and watch how the volume picks up, how people just begin to sell off and kind of sort of panic, because that's how people are, fearful, especially around this time. So boom, it goes down, it sells off, and now we have to establish our support again. Boom, establish our support, resistance. Now I forgot to mention, this is kind of like a bouncy ball. So boom, it opens down, right? So then support, resistance, support, and then it breaks support with volume. Boom, and then again, it's like a bouncy ball again. Now this is when we should have scalped. Now scalp is securing your profits. Say you bought 5 contracts. This is when you should have sold 3 out of the 5, because it's unpredictable. Okay, so around this level is when you should have sold 3 out of the 5. So boom, it goes down, it bounces right back up. Boom, hits resistance. Boom, goes back down. This is when you should have sold the last 2. If you bought 5, say you should have sold 3 here and 2 here, and that's basically it, boys.